Hi, this is Kim Watson. Welcome to a weekly outlook. Just a quick recap on what I'm looking at here. So I'm really looking obviously at the individual currencies themselves. I'm then looking at what the central banks are doing in terms of the current base rate, what's expected in the next change. Then we're looking at the sentiment here of the biggest traders out there, the asset funds, pension funds, etc. And of course the good old hedge fund traders there. And then I'm looking at the sort of what's the key information coming out this week, and then we'll look briefly at the trends. I'll look at them in summary here, and we'll have a look at a chart or two just to see where things are. But just a key thing, what I'm looking at here is alignment basically. So if you've got something like all pointing down in terms of the asset managers are chucking, not wanting to be long anymore, the traders are getting shorter and the charts are all short, well, and there's no interest rate increases, and you get a dovish response to that. It all looks like there's potential for bearishness. So that's basically what I'm looking at there. So here we go. Anyway, I pointed at the euro for some reason, maybe because I'm bearish on it. But let's start with the US dollar. Now the base rate currently 225, meeting in 2 weeks' time. But this was the sort of last week, and there's a lot of Fed speakers speaking this week. So near enough every day there is a speaker. I didn't list them out because it's just a waste of time listing them out, because they're all on Forex Factory or any other calendar out there. Sentiment, obviously looking at the sentiment here, it's recovered a little bit actually. Longs are still we're just bouncing back there. They're still long, but just slightly easing off some of the long positions on the hedge funds, and you can see why in terms of the expectation. I'll just drag this into sight, and the expectation next year it was expected it may have 2 or 3. There may be some way under normalization of in terms of what the interest rate should be sitting at, but it's now taking, there's more of a dovish, and we'll hear from Powell again, but there's a more dovish approach coming, and it's not until May that there's a percentage or probability of totally more than 50% of a base rate increase at the moment. So that's the outlook there. So overall it's slowed down somewhat, but of course I've said it many a time, and when we start looking at the euro and everything else, yep, the US dollar slows down. Often that's a sign that the world's slowing down in terms of what's going on for whatever reason. But there'll be we got non-farms this weekend on the 5th. This Friday on the 7th rather, and on the 5th we got the ADP data. PMI figures out on the 3rd and the 5th, so we'll be looking at all these growth numbers to see what's actually happening with the US dollar there. And if the growth is continuing, the stronger it is, the more likelihood that the interest rate increase may come a little bit earlier, and they may have 2 next year as opposed to just 1. But we'll see what sort of approach these speakers have this week as well. Euro wise, end of bond buying is next week. We've got the ECB meeting, so we may get some final sort of comments coming through, speakers or whatever else before then. I doubt there'll be too much now though. There's an expectation for next week for them to mention that they're going to end bond buying, but I think, and not alone here, but there may be a much more dovish approach coming through. So a lot of the figures that have been coming through of late are pretty soft. The longs position from the asset managers and continues to reduce. Short positions coming down a little bit from hedge fund managers, but it's truth. I mean, they've been increasing, and there's a hell of a short holding sitting there at the moment. What could be moving us this week? Well, the Italian debt situation is still not sorted. We've got the CDU, German CDU meeting to vote on Merkel's replacement, and of course we've still got the Trump factor sitting in there. Will he start suggesting that tariffs would go on the European cars? So there's still much to be shaking that market up a bit. Overall, technically we're still in a bearish zone from a weekly and daily point of view. The pound, well, 0.75 interest rate, not expected to see too much of an increase rate until the 2019s, unless you believe what Carney says. And of course, if we go for a sharp Brexit with no deal Brexit and just leave, of course they'll have to increase interest rates just to punish everyone, just to prove that he can damage something. Well, that's certainly the impression he gives. Now, what's happened here? Well, asset funds, they're getting shorter at and now 68% short. They're getting shorter, but the hedge funds have changed. They've switched to the long side. They were pitching up a little bit, less shorts and whatever else, but there's a switch over the last 2 weeks there, and they've pitched on the long side. And it's just switched over here, so maybe they'll take that more bullish approach. Ironically, the pound still sold off quite a bit, but we'll see. But there's a lot still. Brexit's still sitting there. The 11th is the date for the vote on that next week, so there'll probably be more to and from that. We've got the Euro court to see. I think that's today, tomorrow. And whether they'll reverse could the government reverse Brexit and not accept the vote that was carried out 2 years ago. That would be highly popular. Bank of England, Carney is speaking on the 4th there tomorrow as well. Services PMI on the 5th, which is the most important one of the PMI numbers coming through. So quite a lot. At the moment, from a weekly point of view, we're a downward trend, as is the daily. Dollar yen. Ruled out near-term increases, so there's nothing going to be happening there. Short-wise, the short 64%. In fact, these are just dropping down slightly in terms of the number of shorts, but they're still predominantly short 64 and 75%. Earnings reports coming out on Friday then, so that's a wage report basically. At the moment, the dollar yen is sitting in a bullish trend there. And then we get to the three currencies that may just, well, at least two of these, the Aussie and the New Zealand dollar, they were outperforming the US dollar and everything else last week. The Canadian dollar a little bit different, but all three of them sit on a different sort of scale here. Interest rates, well, the Reserve Bank of Australia is meeting the 4th. That's overnight through the Asian session tomorrow. So we'll see what the thoughts are there. GDP data is due on the 5th and retail sales on the 6th. So there's plenty to be moving, and see if we do see a follow through in these numbers. Now, short positions are still there, but they're actually reducing. They're moving towards a more bullish sentiment there. And the Aussie dollar, it's got in a bullish trend here at the moment, so that's where we are there. Canadian dollar, well, its the longs have dropped down to just 50%, and it's almost on the verge of crossing over to the short side there. Shorts have moved down to 58%, and the Bank of Canada rate statements due on the 5th. We've got the Bank of Canada governor speaking on the 6th, and then employment data on the 7th. So quite a big week for the Canadian dollar as well. At the moment, it's been pitching up on a weekly and daily point of view against the US dollar, or the US dollar's been pitching up against the Canadian dollar, and it's looks like that may carry on, which is all aligned at the moment. So these aligned ones, the US dollar, yen aligned. Basically the euro aligned, so we've got quite a few of these aligned. Now the New Zealand dollar, well, here's some more alignment coming into play. Actually, interest rates not expected to be increased for a significant time with the New Zealand dollar, but this long position, they switched long on the asset, so it was massively short. We were seeing extremes on the overall positions on the short side. This is all being sort of unwound gradually. Will it continue pushing up? Well, it looks okay at the moment. The short figures were still flat from the hedge funds there, so overall looking, well, there's still possibly some further upside on that New Zealand dollar. Finally, the S&Ps, looking at the E-minis. Longs are pretty flat at 61%. They're staying pretty much there, and shorts reducing somewhat from back to about 53%. So maybe there's belief that the market may pop up again there, and we're seeing that at the moment, to be fair. So we still, it's a bit of a crossover on the neither. it's a bit flat really from a weekly point of view. It's bounced up last week, so the daily trends in a positive state of affairs, but overall it's still could go either way pretty easy. So let's have a look at these charts. In fact, I'm looking at the S&Ps. I'm going to do this in reverse almost here, well, this part anyway. So this is where we are on the daily. Let's just flick back to the weeklies here, and it's sort of it's edging back up, and that's why I've left this sort of crossover pattern there. It's still got potential to roll over, but if it breaks the highs from a couple of weeks ago, which is pretty close to, I'd say, a couple of 3 weeks ago or whatever else, it will put a higher low in, and that could see us pushing back up there. So there is potential for it to sort of all change back up again. It could equally just push up into, there's a bit of a Gartley pattern on this market here. It could just push up, run into some resistance, and roll again. So but it's yet to break these prior highs here, and it needs to do that first. If it can break those highs, well, I'd still be a bit wary in terms of the Gartley pattern sitting on there, which could see a rollover, but it's done neither yet. It's got to break that to become a slight bit bullish, but still have potential to roll. But it's got a weekly, monthly pivot all sitting below there and could well become a target. Okay, let's go back into the currencies here. Euro dollar then. Let's go to weekly picture. Still downward trend, not a lot to be said there. I was looking last week whether we would have seen a bit more of a breakdown from that weekly 200. It's been holding, it's hand railing that. I think there's still potential to see a sell off further. I know we're consolidating in this phase, and we may see a more of a wedge pattern form here over the next couple of weeks as we lead into Christmas. There's not been a great big movement, 300 pips or so I think it was, someone mentioned, on some of these currency pairs. Probably not the euro. Actually, yeah, definitely not the euro, or it might have been just. But either way, it does look weak there, and it's still got the potential for rollovers. The pound, well, it's selling off. There's plenty of sentiment for it. Technically, it's been holding around these lows, and it just looks like it wants to tipple over a little bit more maybe, and well, then it becomes into a bit more of a free fall towards the 126, maybe even further. Daily picture's not really just showing us anything different. Lower highs, lower lows running through there, looking weak. Dollar yen. This wedge pattern is a bit like the euro in the sense that it's got this wedge in just this inverted euro. It's got the wedge sort of forming there on a weekly basis. It's still got potential to pitch through. It's tapped now, it's retested this trend line from the highs here, this sort of downward trend line. The overall picture on the dailies, though, you'd argue is still in the upside there. Higher lows coming through more recently. Now, if it can pitch back up there and breaks that area, well, then we could be in for it towards the R1, more likely pushing up to 114.78, maybe even all the way up to 115 at some point. But if you measure the whole wedge and try and project it upwards, so still looking bullish at the moment, and fundamentally nothing there really to change that. Aussie dollar, now this is a bit of a change, and we'll see what happens with the central banks. I don't think they'll want the Aussie dollar to get too strong, to be fair. Where to? Well, it could carry on pitching towards this weekly 200 at this rate. It certainly has broken that sort of smaller trend, has put higher lows in as well with this sort of the retracements back down. It's been doing that for a little while, putting higher lows, higher highs in, and on this daily basis you can see it. Daily wise, it may just pitch up to that weekly 200. We'll see. I mean, it's a big thing. There's a gap below us still. There's a weekly and monthly pivot below. It depends on what sort of attitude and how they see the forward figures tonight, really. So that's the Aussie dollar. It does have potential, and it may give us buying opportunities off the daily or the weekly or monthly pivots there, if it gets back and it's not too bearish. Canadian dollar. Now the Canadian dollar may benefit. There's the sort of talks of oil and etc. that hit the markets overnight, and it's sort of seen quite a move on oil. Now we could see Canadian dollar, well, if we get more news coming out positively with the meetings this week, we could see this roll over further. It hasn't quite got up to my initial sort of areas here at the prior highs there. The previous week it got beyond the shoulders of the candles or whatever. Still got potential to push up yet though. It's not certainly met all of the potential coming from there. Now Canada as a country isn't doing quite so well. As they start cutting oil production, which is what they've suggested, it also cuts revenue. So we'll see how what comes of that. But certainly from it still looks bullish from this point of view. It may have broken the trend line slightly there, but it's still putting highs in. It hasn't broken well. Maybe just tapped into the lows there, into the monthly pivot, etc., and through that 34. We'll see how it comes. There's plenty of news out this week on the Canadian dollar. And finally, New Zealand dollar. Okay, New Zealand dollar. So weekly wise, we've run into the weekly 50. As I mentioned that last week, I think about the 50 to 200. Still got potential to be hit. Both of those over the 200 now. Still got potential to see that to be hit. It's got some divergence, double divergence running across these highs. That's the one thing, and it's got a gap, and technically it could roll back towards the weekly or monthly pivot. That's the thing here with this pairing as well. So yeah, technically bullish, but a bearish cloud sitting there effectively in terms of the potential for it to roll back to weeklies and monthly pivots. Right, that's it for me for this week. I hope you have a great week. I did do a little video, as I promised. If you wanted more explanation about the COT sentiment and reports, I'll attach that to the end of this YouTube link so you can actually follow through and watch that accordingly. Have a great week. I'll speak to you next week. Bye for now.